Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Thursday, the 14th of May, 2026, and we're in a no news is good news situation in relation to the Trump-Xi summit in China. In today's video, I'll break down everything that you need to know from day one of that, as well as some key U.S. economic data that we've gotten this morning. Let's get into it. So President Trump and Xi met in China. They both had separate readouts. There was no joint statement, at least as of yet. Interestingly, and perhaps not surprisingly, the two sides differed in what they focused on. China's focus was more emphasizing Taiwan and how that remains a Chinese property. Meanwhile, in the U.S., the bigger focus was on trade with potential interest in imports of Boeing planes and soybeans. This is broadly what the market was expecting. And recall, of course, that expectations were lowered dramatically for this summit in the wake of the Iran war. No big headlines there. And as you can see, markets are taking that mostly in stride, with oil just ticking a little bit lower, indices on the rise, and the US dollar and gold flat. We will have another summit in September, and there's one more day to this summit between Presidents Trump and Xi, so watch for a potential joint statement there, though again, market expectations are very limited for any salient developments. Separately, we had the U.S. retail sales report, which came in as expected on both a headline and core basis. Usually, if you saw a 0.5% or even a 0.7% month over month rise, that annualizes to very strong retail sales. But you have to remember that retail sales are not inflation adjusted. So in many ways, this is just reflecting the broad rise in prices that we saw from yesterday's PPI and the day before CPI report. So nothing too dramatic there. And initial jobless claims came in just a tick worse than expected at 211,000, still near historically low levels, still suggesting that the US labor market remains relatively robust. Today's chart of the day is the Australian dollar versus the US dollar. Here on a 4-hour basis, we can see a very clear bullish trend line, though more recently, let's say over the last week, we've seen Aussie dollar consolidating in an increasingly tight range. And if we drill down to the sub panel here, where I've plotted the 14-period RSI, we are seeing a bearish divergence. Basically, the RSI put in a lower high, indicating less buying momentum, whereas price itself put in if not a higher high, at least a high at the same level. This indicates some risk that we could see a downside break, but the dominant technical structure here is this bullish trend line that's formed over a longer period of time. So a very interesting situation to watch for the Aussie over the rest of this week and perhaps into early next week. Levels I'll be watching include 72.70 to the top side. If we can break above there, that would mitigate the bearish divergence and could point to a further rally up into the mid 73s. And meanwhile, to the downside, around 72.15 is the support level that's been in play throughout this week. If that level gives way, Aussie could see a deeper pullback as it retraces this big uptrend that we've seen over the last month or so. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I could ask just one quick favor before you go, please do drop a like on this video. It's a free way to show your support that really helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com. Thanks again, and best of luck with your trading today.